Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, December the 29th. I'm Eric Wilkinson, and you very well may recognize me as the Wolfman from mainstream media, where I've talked about the economic data, the geopolitical environment, how that comes in to impact the markets with some of my market analysis. Well, I do the same thing for you folks out there, but I go a little bit further and talk about these option strategies I'm implementing into my portfolio based on those assumptions I come up with at that market analysis stage. Well, and for you, I've gone a little bit further, and over my 25 years of trading options, I've streamlined the process to find the optimal strategy for you folks out there to implement into your portfolio based on those same assumptions that we come up with. And we aren't just picking a option strategy out of the hat like a bullish assumption. We go for a long call. No, what we're doing is we're looking at these underlyings and we're trying to find out whether or not a long call or a short put might be the optimal strategy for a bullish assumption. We've got all of the option strategies we go over in our webinar, so please check those out at protraderstrategies.com. And without further ado, let's get on with it. Economic data, it is a quiet week this week, a shortened week as well, but today really just about nothing going on here other than the talking heads in government and around on TV, trying to find some semblance of why we are moving the way we are. Really, it comes down to the stimulus package, albeit it wasn't as big a stimulus package as the market was expecting. It's still celebrating that and making moves to the upside. We've got some new all-time highs that we'll talk about here today as the markets are starting to move. But is that something that's going to continue going forward? We'll discuss that as we go through this today and talk about the trades that I've done as well. All right, crude oil up another 50 cents today. Got a little bit of a sell-off yesterday. I was thinking, man, this thing is going to finally start to break down and go below $45 a barrel. And no, today we're getting a little bit of a boost. A lot of people talking about the 737 MAX going back into production. Now, something to note about that 737 MAX and why Boeing really wants to push this airplane is because it lowers costs by 20% for the airlines and everybody else with fuel and maintenance and things that would go into trying to maintain that airplane or fly that airplane. So it is a pretty big deal that this thing gets out there for these airlines, and that's why they really want to look for it. I don't think that that's really driving crude oil. It's just really something that we've been seeing in the airlines is that there are more and more people traveling. As a matter of fact, on the 27th of December was the biggest travel day of the year, generally speaking, as well, and it did not disappoint, really. It was a very busy time at the terminal for the most part. All right, and so that's possibly giving us a little bit of a boost here, plus people talking about moving. One other thing before we start moving on here is that I noticed we've seen in the economic data points that we're seeing earnings go down, right? We know that there's a lot of unemployment going on. We also have talked about the spending is starting to dwindle a little bit here, and another aspect of that is JP Morgan came out with their credit card index, I believe it is. I don't know exactly what it is, to be honest, but I've heard them mention it before. But anyway, credit card spending is massively falling off during this holiday season, which means that with people unemployed, they aren't buying with their credit cards, which also leads me to believe that maybe this holiday season was a bit more of a disappointment than what we originally had anticipated with the data points there. All right, a bit of an intrusion there. Sorry about that, guys. The wife coming in to let the dogs out, probably for a treat, morning treat that they're looking for, or a little bit of breakfast. Anyway, let's back to the markets. We've got gold futures moving higher here by about $4.50. Now, you've heard me talk about this time and time again. I expect it to break out of this little triangle, but mostly to the upside and break back into that 1900. As we're seeing this weakening of the overall dollar happen, we're not seeing it reflective so much over here in gold. You talk about Bitcoin, though, that is going through the roof, and a lot of people are saying that that is going to become one of those inflationary gauges as the weakening dollar has really sent Bitcoin off to the races and to the upside, whereas we really have this lagger of gold stuck in a rut right around 1850 to maybe 1900 as that resistance, overhead resistance, starts to come into play. And really it lines up exactly with that 1923 that I have lined up here with the Fibonacci's. And that is a major support and resistance. And we have just not been able to test that in the last month or so. All right, moving on to the bonds. Bonds unchanged for the most part, and I've talked about this. I think that they need to start moving to the upside here. As interest rates go down, we should see bonds go up. But what we've been seeing is the flip side of that. The interest rates are going higher and the bonds going lower. Now, know that they are inversely correlated. And that's a little bit bizarre to me because we've heard the Fed say that they aren't going to raise interest rates anytime soon. That's helping with the overall markets in easy money. But at the end of the day, the bonds are kind of bucking that a little bit and saying interest rates are going to go higher here relatively soon. And I think that that is a little bit off at this point. I haven't played anything to the upside here in the bonds, but I do believe that the risk is to the upside right now. All right, VIX slightly moving higher because we made those all-time highs. We should expect VIX to go higher? No, not necessarily. We actually saw the VIX come off a little bit. On the open, markets really spiked to the highs of the day, especially in NASDAQ. Not so much here in the Dow Jones. That high was an overnight print, but you can see we are near the lows of the day. And since the open, we've precipitously just kind of slowly started down ticking without much of any movement to the upside. Here we have the NASDAQ up 33 points on the day. You can see that is an all-time intraday high for the NASDAQ futures here. But again, losing a little bit of steam throughout the day here, which is causing a little bit of a pause. Are we going to make another rollover correction? It's probably due, especially if we want to maintain this healthy, strong upward trajectory. You need those pullbacks every once in a while so you don't get that pent up demand to sell. If you have the markets moving back and forth in a nice ebb and flow, even if it is moving to the upside, right? If we have that nice ebb and flow, people getting in and out, it is a little bit more healthy than a direct move without any pullbacks. That has a tendency to get people a little bit more anxious about any type of move to the downside when we've had just a slow or even a sharp move to the upside. That has a tendency to create a little bit more angst as opposed to a nice ebb and flow to the markets like that. All right, so that's what I would like to see. And with the E-mini S&Ps, you can see the overnight high was created, but we tried to make a move for that and fell flat as the day has progressed here. And one green candle there, but it is now engulfed. So it looks to me like to the downside is a direction that you need to start protecting against, maybe buying some puts and some different underlyings, but adding some negative overall deltas to the portfolio is really the best way to combat this so that you can take advantage of any moves to the downside there. All right, so without further ado, let's get on with my trades that I've done. And if you guys remember, I've had on PENN since the 18th, which was the day the low was created, right here on the 18th. And I have bought this stock and then decided to stay mechanical with it like I do with all my trades, right? And this being a long stock position, I didn't use options. Why? Because it was less than a $5 stock, and that there's no real reason to go out there and then buy calls or something like that, because the calls are going to be as expensive as buying the stock at that point. So with that being said, I went in there and bought this stock on the 18th for $4.49. Now, you folks that have been around for several months now, at least since March 18th, have watched me play around with this trade consistently over that period of time. So like I said, I bought that originally for $4.49, started getting mechanical with that trade on trying to do covered calls at around 45. Never got the pricing I really wanted. I finally ended up getting covered calls implemented around this strategy when I sold the October 85 calls in there for $1.35. Now I bought those back for 14 cents. So let's just call it all in all, lowered my cost basis by $1.20 just to keep that math a little bit more simple. And then after covering that trade, you guys remember I went out there and sold the January 120. Sorry, I didn't do the January. It was the Dees. I sold the Dees 90 calls in there for $1.02. Well, I bought those back by for 80 cents. It wasn't a huge win on that, but I collected another 20 cents, $20, lowering my overall cost basis per one contract, right? If you do the option multiplier, remember every option contract has 100 of the underlying. That's why we have to multiply it by 100 for every one lot that we do. So in a sense, lowered, let's just call it lowered by another 20 cents. So all so far, I've lowered my cost basis $1.40 on this trade. And then most recently, I went in and did the January 120 calls in there for $1.23. Well, I bought them back today for 23 cents. I told you yesterday I was trying to buy them back for about a nickel, or sorry, about a quarter. Was about trading around 50 cents. We got this big pullback today, and when it was down $2 on the day, that's when I was able to get out of this trade for 23 cents. As a matter of fact, Lex, I'm sure it's still the low of the day at this point because we've gotten this big move. I mean, we were down $2 at that point, and now we're in positive territory. So great timing on that. And one of the very few times I can have that claim to fame where I bought the low of the day. So I'm going to celebrate that all day long. Anyway, market has moved back, lowered that overall cost basis now all day for $2.40. So, more than half of what I paid for this underlying, I have lowered that overall cost basis, right? I bought it for $4.49 and collected $2.40. That is huge, and that is how it's done because I synthetically bought this at a level that was unachievable before. Now, for some of you people that are looking for income generation, well, think about this. I have created a few dividends in PENN stock throughout the course of this time. That money goes into my account. I get to keep that as well. So you could look at it as a dividend or just lowering the overall cost basis. I prefer lowering the cost basis. Why? Because it creates a situation where I can look at it and say, hey, you know what? I own this less than what people were able to originally even buy this for. Even though I bought it on the day that was low. I mean, this trade went 75 cents in my face at one point in time, but since then it has done nothing, as you can see, but move higher, mostly due to Barstool Sports being a part of this company. All right, and that's about it. That's the only thing I've really done. I am looking to cover some of my IBM covered calls. Those are a little bit further away, but we'll see if those, if some of this volatility coming out today will allow me to get out of those covered calls in IBM. But at this point in time, I'm not too concerned. They're quite a ways away, and I'm going to leave those on and try and get a couple more pennies out of that trade before I start to consider covering it. That's about it. All right, so one last thing though, actually that's almost it, because why we always have to go over our disclaimer. Please take a moment to go over this disclaimer as we're an educational company. I'm not trying to get you guys to do what I'm doing. What I'm trying to do is get you guys to understand options. I'm not talking about learning how to trade options. I'm talking about understanding options, because if you understand these options and how they work, the levers and pulleys around them, then you will actually be a much better trader, because you will understand why we are implementing a strategy around a given underlying versus maybe another strategy, okay? Why there are better opportunities out there. All right, so please check that out, Pro Trader Strategies, and that's all I got for you guys. Have a great one, and if you can't take that, take it easy.